Good morning, good morning. Good morning. How are you? It's Thursday. We're getting pretty close to the end of the week. And the energy in the markets are starting to die, as you've probably noticed. We're starting to see it come to an end. And so I wanted to take a good look at the euro. Okay. Because we're seeing a lot of people getting in short the euro right now. And a lot of people are going to get hurt. Unfortunately, a lot of people are going to get hurt. And already a lot of people are hurting. So we noticed back at the end of March that price was dropping down into an area of demand right down here. Okay, price was making its way down right here. And what was this? This was an area of buying for the banks down here. So as price was coming down here, what do you think the banks needed to do? Okay, look at the COT report data. What do they need to do? They needed to buy. All right, so what would they need in order to buy? They need people to sell positions to them. And so that's what was taking place as price was dropping down to this area of demand. All right, as price was making its way down to the area of demand, retail were lured into selling, and institutions came in and bought. So I thought, okay, this is going to be interesting. Let's take a look at the news and see what they were posting at the time. Uh, Good morning, Da Vinci. Let's see. So I thought it'd be interesting. Let's take a look at what the news was regarding the euro as price was coming into that area of demand by the banks. Okay? It's always interesting to see because I want to keep showing you this pattern of what continues to happen. All right? So remember, here's the news, and this was as price was making its way down here. Okay? So what do we have? Euro US dollar price outlook. Euro to struggle as US economy outperforms. Euro to struggle as US economy outperforms. So you would think that if the US economy is going to outperform, then we should be seeing the euro collapse, right? That's what you would think. So, and that's what many people are thinking. Well, if the U.S. economy is going to outperform, then the euro is going to collapse. Okay. So between March 23rd and now, what's happened? Has the U.S. economy outperformed? Is it continuing to outperform? Like, what is going on with the U.S. economy? March 23rd, the U.S. economy was going to outperform, but now it's not going to outperform? I don't understand. How is it so quickly that things can change? How is it that within a matter of 5 days, 6 days, all of a sudden the euro is not going to struggle and the U.S. economy is not outperforming? How can such a statement be made, you know, and then all of a sudden the exact opposite take place? So you have to really think. You have to really think about it. These these companies that are reporting this, do they really know what they're talking about? Now, I've come to learn not to listen to them. But then I ask myself, these companies that are reporting these things, are they reporting them because it's reality, or are they reporting it because somebody's leading them to write these articles? I'm not sure. I'm not sure. But what I can tell you is that it's extremely misleading. March 23rd, I mean, to write something as solid as the euro to struggle as U.S. economy outperforms, you're saying something big. You're saying the U.S. economy is going to be outperforming, and it is outperforming, and that's why the euro is going to collapse. This is not something that changes on a whim within a week. All right, this is something that's supposed to last a while. the the U.S. economy is outperforming. It should continue to outperform, right? It doesn't just change in a week. So that this is one perfect example of what was used to sucker retail traders into shorting the euro. All right? News like this. Because you hear this and you're like, oh, damn, this is going to drop. Euro's going to drop. I might as well get inside, get in some short trades. So, and then this was what happens. And then we wonder why we have this. Okay? With most retail traders shorting the euro. All right? All right, so as we browse through a few more, why don't you hit that like button for me? I'd appreciate it. Let's take a look here. What else we got? Let's see what else we got. Euro US dollar price analysis. 118 area holds the downside for now. Oh, okay. They added for now. That's good. Euro US dollar price outlook strong. PMIs failed to prevent euro dollar breaking support at the 200 DMA. The 200-day moving average. Any of you have moving averages on your charts? Do you think it really matters, those moving averages, when price contacts them? And I know a lot of people say, well, if you have enough people looking at them, then, price hits them and it reacts. Yeah, but you also understand that the vast majority of traders are short the euro too, right? So does it mean it's a good indicator to have on the charts? Is it something you want to trade off of? If most traders are going to be trading off of it and most traders are short the euro, is that something you want to be doing? Probably not, right? Probably not. So Euro US dollar price forecast, euro continues sluggish behavior. Sluggish behavior. Price forecast. So is it a forecast when you say it continues sluggish behavior? Like, think about it. I'm going to give you a forecast of the euro. It continues sluggish behavior. You're just saying what is taking place right now. That's not a forecast. A forecast is what's going to happen. The weather forecast is it's cloudy now, but the sun is going to come out later. That's a forecast, right? Not the forecast is it's cloudy right now. Well, yeah, we can see that. It's cloudy. But tying in this word forecast with continue sluggish, okay, means, it sounds like it's going to continue. That's the forecast, that it's going to continue to be sluggish. So these words got to be very careful, because although they're not saying anything, what you're hearing, what the average trader hears when they read this, is it's going to continue going to the downside. Let's see, any of your questions? You saw my tweets this morning? Okay, that's good. I just took your course and is my second day. How great your course. Thanks. Appreciate it, Evans. Just late. Hello, Ronaldo. Good morning, Kev. I'm doing well. Good morning, Nazar. Exactly a collapse. Yeah. Exactly what to report and manipulate. Great, man. And remember to watch the vids. You need the journal study. Yep. Talking Euro USD live now. Great price analysis. Thank you, Nazar. So let's go along and take a look. I bet you there's more. Price forecast. Euro continues to break apart. Euro continues to break apart. Price forecast. Euro US dollar price forecast continues to break apart. Price forecast. Euro bounces. Must have been down here, around here somewhere. Or hold on for a second, that was a month ago. It's not specifying the date. Euro US dollar price forecast, euro breaking through 200-day moving average. Oh, okay. That's great. The euro has fallen a bit on Wednesday to slice through the 118.30 level and the 200-day moving average. So it sliced through to the downside, the 200-day moving average. So does that mean anything to anybody? The fact that it broke through the 200-day moving average? Maybe that means something to somebody. And they're looking at that and they're saying, wow, that's very bearish. Again, more reasons why you shouldn't be paying attention to simple moving averages. Euro US dollar price forecast further decline targets the 200-day simple moving average. Euro continues to fall. Euro continues to look soft. So you get the point, right? Is the news telling you anything of any value when they release information? If anything, they are suggesting the exact opposite of what's about to happen. Okay? What you can see is there's more of a suggestion of the opposite of what's about to happen. So you wonder why people are so short right now, is because when you're trading based on different types of analysis or different types of indicators that are not based in reality, then eventually, you can't get any clear answers. You can't get any clear analysis from the charts. So what are you left with? You're left with going to the so-called experts, the expert analysts, who are going to give you forecasts. And there's two things that are just completely ironic about this whole situation. Number one, these people are not experts, and number two, these are not forecasts. Right? If anything, they are going to lead you to do the opposite of what you need to be doing. So that's the unfortunate truth when it comes to the media. And Google is a wonderful source of all this information. Their top hits are going to be the most luscious delicacies for you to enjoy. So be very careful. Be very careful. So a lot of retail traders are being suckered into shorting, and now we have this taking place on the chart. Okay, this is an uptrend on the daily chart. This is considerable. All right, very considerable. When price was here, in this area here, that wasn't much. That was a nice move to the upside. We were kind of expecting that because where price was reacting from, we were expecting a move to the upside. But as I mentioned to students, what we really want to see is the institutions create a nice uptrend. That's what we're looking for. We want to know that the institutions are committed to taking this much higher at this point. And for them to be committed, we need to see them create an uptrend. So they've done that. They've done that. So this is just setting things up for a big move to the upside. All right? Now, here's the problem, right? The banks are dealing with this situation where we already have price very high up, okay? So now there's going to be a lot of retail traders thinking, wait a minute, I think I was suckered into going short. I don't think this is going to drop anymore. I can connect the trend line. So, and there's already been a test of that trend line. Okay, right here. So maybe there's going to be another test. Maybe I should get in then. Maybe go long now. Close my short positions for the loss that I just took. I opened up a one lot with my $2,000 trading account. I don't understand how people trade like that, because if you were suckered into going short here, you've blown up your account. I see people showing me $2,000 trading accounts and they open up positions of one lot. I can't understand how they do that. So so now we're at these highs. So you know what everybody's thinking, right? Retail traders are like, damn, now I think I should be getting in. So there's going to be some more shenanigans coming our way. So the week is coming to an end slowly. So what are we going to expect from here? Well, we still got these highs here, right? And once we break through here, I believe there's going to be very strong momentum to the upside. So I also think that considering what is taking place, we look at the positions. They're at 223,000, which is good. That's a good amount of long positions right there. Their maximum was 266, so we're not far away from that. So what they could still do is they could rally price up to that area of supply, take profits on long positions, which will fuel a move down, which would explain why they're starting to get aggressive with shorts, okay, up at these highs, in preparation for a push to the downside. So once price hits supply, right, this upper supply zone here, all right, let me just draw that. In fact, let me just clear everything out. Let me just point that out there. There's that supply zone, okay? The upper supply zone, price is here. Once price hits this upper supply zone, there's a very good chance they're going to take profits on their long positions, okay? Very good chance. Why would I come to that conclusion? Well, I take a look at the COT report. I see that they're at 223,000. Maximum size is 266, so they're approaching maximum size, right? They can surpass maximum size, and it's probably likely that that will happen in the future once they do what they need to do in the coming weeks before they really kick in with the strength. I think there's a good possibility of that, but I think short term, if price hits that area of supply, that upper supply zone, they could be using that as an area to take profits on some long positions, because you see how they're increasing their shorts. You see that, right? 116 back on April 20th, then 119 back on April 27th, 121 May 4th, and May 11th, 129,000. So you see the increase in short positions. You see the coloration of the cells here turning more red. Why are the cells turning more red? Well, that's because they're getting aggressive with their positions. So why are they getting aggressive with short positions as price rallies up towards supply? Well, good question. Logically, one can conclude that the reason why this is taking place is because they're going to take profits on long positions and then price is going to drop. Because you have to assume that once price gets up here, a lot of retail traders are going to say, darn, they tricked me again. Those darn little rascals, they tricked me again. How was it on the Scooby-Doo? Remember Scooby-Doo? Damn it, you rascals, if it wasn't for you kids. So I think there's a good chance of that. I'm going to be keeping my eyes open on that. I'm already situated long, and so I'm in it for the long haul, but I'm also very much aware of the potential of something like this to take place, okay, from this area. Very, very possible that that takes place. So I'll keep my eyes on that, and it won't scare me out of my positions. I won't be bothered, okay? Here's the 4-hour chart. Okay, beautiful. Look at that nice rally from that area of demand. Isn't that beautiful? You see how well supply and demand works? Alright, I haven't checked, but let's see 15-minute momentum shift off of there for a day trade. Let's take a look. Okay. Let's see. Was there a day trade? Yeah, it looks like there was. Yeah, it looks like right here. From what I'm seeing, here is your day trade right here. Getting in long here for the move higher. Okay? Let's go back to the 4-hour chart and take a look at this. So one thing I like to do is I like to plot the zones from higher time frames onto lower time frames. So let's do that now, and I'll show you the reason why I like to do that. So we'll sync that, and we'll sync the other one. Now we'll go over to the 4-hour chart, and we will enlarge it. And there where is it? I've only got one. Where's the other one? Oh, no. It's supposed to be daily. Daily. Where are you? Supply daily. There we go. And sync. And where's this one? There we go. Okay. Alright, so let's go back here. There we go. So here's a 4-hour chart, right? And I've got these lines now, these dotted lines on the chart, which are basically a representation of that daily area of supply here on the 4-hour chart. So what is this telling me when I see this? Well, what I'm seeing here is that we have the upward trend on the daily chart, which the institutions created. And remember, I told you they wouldn't be creating a daily uptrend unless they had plans to push price up, right? Now, in amongst this whole situation, we have now an uptrend on the 4-hour chart, all right? Uptrend on the 4-hour chart. And so here is a institutional area of buying by the banks. And now what do we see? We see price drops into it, and now they're starting to take price higher. Now we have short-term targets here, 122.75. All right. So if you see these targets anywhere else, you know they got them from me, because believe me, there are people out there doing that. So these are our short-term targets. We've had them there for quite some time, and the expected move is very likely like this. So this is the area that we're looking at price contacting. Probably not this week. I'd be surprised if it got there this week, but it's very possible. It's very possible that it gets there this week. All right? But if it doesn't, if it makes it, halfway up, just know what we're getting into next week. All right? One of the most powerful things that you can know about the markets is what is taking place now and in what context. That's where most traders have absolutely no clue about. And if you don't understand the context of price, how can you know how to trade it? Or how could you know what to look for? Or what is to be expected next, right? So I'm telling you what's happening right now with the euro. This is a matter of fact. This is not my opinion. This is a matter of fact. By looking at the charts, we can tell you that price came down to a major area of demand at the end of March. And retail traders were suckered into going short at that time. Why was that? Well, because the banks needed to take on long positions, which they have been accumulating for some time now. As price rallied from this area of demand, they created an uptrend on the daily chart. Okay, as they created this uptrend on the daily chart, they also created an uptrend on the 4-hour chart. Now, on the daily chart, we already have institutional demand in play. So, as institutional demand is in play, what will take place is structures to help facilitate the move to the upside will take place on the lower time frame. This is the lower time frame, the 4-hour chart. Do you see the momentum building in the euro right now? Okay, are we surprised that this is taking place? The answer is no, we are not surprised. All right, this is what we would expect from the euro. We would expect momentum to be building off this area of demand, and there's nothing to stop price from continuing higher until we get to that area of supply on the daily chart. So this is the move, right? And the context is what I just laid out for you. So the expected move is to the upside. And this should continue for the rest of the week, likely into the beginning of next week, as long as it takes until this area of supply is contacted. Now, can I tell you 100% that that's going to happen? No, nobody can ever tell you 100% something's going to happen. But understanding the context of price, what has already transpired, leads us to logically come to the conclusion that what is going to take place in the coming few days is a continued rally in the euro US dollar. All right, that's just the logical understanding that you have to come to. So that's what we're seeing right now. Okay, so we have demand in play, and we're seeing a continuation of that move to the upside. All right, let's see any other possibilities of trades on a lower time frame. Let's take a look one more time. Let me see here. Okay, let's examine this, and I would have to say, alright, so what I'm looking at here is, let's enlarge this chart. Yeah, so it looks like what's happening now is this price action right here. Okay, what's happening here is really important. You see how much strength to the upside, right? It's pretty strong, this candle. So we want to see this strength continue to the upside. All right, and if it does, if it provides us something like this, and it closes up there, all right, I'll be focused on this area here. This green area will be an area of institutional buying. All right, and what could very likely happen is a return back down to this area before it shoots up like this. Okay, so just keep an eye out for that, because it's very possible that this will happen, because the momentum is building right now off that 4-hour area of demand, and we would expect this to continue. I don't see any reason at this point why it would not continue. Let's just put it that way. All right, all the evidence we're seeing in the markets right now would suggest that this move is going to continue upwards. And if it's going to continue upwards, it's going to be facilitated by moves to the upside on lower time frames. So this is definitely what we're looking at right now. All right, so just keep an eye on this for your own notes and see how it plays out. Again, we'd have to see, good strong candles to the upside, green ones closing near the highs, and then a pullback like this. So keep your eye on that. Okay, we got some questions. Let's see. Commitment Traders Report helps read price direction for euro US dollar. Awesome analysis. Thank you, Nazar. I do not understand why the targets are at 122.75. Could you please tell me why? Why are the targets at 122.75? Okay, good question. Why do I have my targets there? I'll tell you one thing, it's not based on any Fibonacci levels, it's not based on Fibonacci extensions, it's not based on bat patterns, it's not based on harmonics, it's not based on anything except for institutional supply is located above. All right, and price rallies from demand and drops from supply. Period. End of story. That's how the market works. All right, anybody tells you any different, it simply is not the truth. And I know this for a fact. This is not just my opinion, because I just want it to be my opinion. This is something that I know for a fact because I've studied the markets long enough to know this for a fact. All right, and this is what we teach in the school. If I didn't know it for a fact, we wouldn't be able to teach it in the school, and we wouldn't be able to see consistent results from it. All right, but we do get consistent results from it. All right, so you can ask any of the students that have joined us and have been with us long enough to read our reports, and they will tell you. I mean, just yesterday I was talking to Nazar, and he told me that since he's joined, he's been going back through the old reports, the old EURUSD reports, and he's like, I hope you don't think that's strange. I'm like, strange? I think I commend you for that. I love that. That's what I want you to do. I mean, I would do that if I joined a school and it was based on, the validity of a system that they were teaching. I would want to know how accurate it was. And the only real way to know is to look at what their past forecasts were and read the reasoning of why they were giving these forecasts, okay? That's the key thing, all right? If I could share one thing that should really stick out with you guys, is that if you follow any analyst, listen to their reasoning why they are giving you the forecast, right? If they're actually forecasting price, listen to the reasoning, because if the reasoning is wrong, you can be best assured that their future analysis is not going to be consistent, okay? Because it's the reasoning that has to be on spot, all right? If there isn't a good reason to forecast price because of the conditions of the market, then you need to understand that. You need to know that. There has to be, a real sense of understanding that at this point and place in the market, we can't know what is going to happen. And you have to know that. But if your reasoning is, no, it's very simple to understand where price is going to go right now, and here's the reasoning behind it. If the reasoning is correct, then you should be more consistently correct than wrong. So that's the important thing. I encourage you to go through the EURUSD reports, because you need to listen to the reasoning behind why the forecasts were given. When there weren't forecasts given, or when there were risks involved in the forecast, and I'll point it out, all right? I'll point it out all the time. Because you have to understand, there's going to be times in the market where it's not highly probable that any type of move is going to take place. But I always try to give some kind of a forecast. But I always will associate if there are any risks involved with it, okay? I will always put that in there, just to let you know, here's my reasoning, but there's big risks involved with this forecast at this specific time, because we really need these things to take place before the probability is there. I share these things to drill into my students' head about the probabilities, about how we need certain things to take place. We need certain trends to come into place for us to build up, for the probability of something to build up, okay? So why is my target there? It's pretty simple, because when I looked at the daily chart and I saw that massive demand was coming into play down here, okay? Institutional demand was coming into play, forcing price up. I knew that there was nothing that was going to stop price until here. Short term. Why is that? Because institutional supply was located up there. And what do I expect to happen when institutional supply gets contacted? I expect them to probably take profits on long positions, and then we don't know exactly how far price is going to move down. It could move down more substantial than, the trend line on the daily chart. So that is the place where I'd like to take my short-term profits. That's why the target is there. Okay? It's based in reality. It's based on what's really taking place in the markets. Okay? There's a reason for everything we do. Why we get in, where we get in, why we place our stop losses where we do, and why we have our targets where we do. And it's all based on the reality of what's happening in the markets, based on institutional buying and selling. Okay? Let's see. What about the US Swiss? Yeah, we're focusing on the euro right now. Kev, when someone takes your course, do they get access to the COT report? Yes, sir, they do. When you become a student with us, you get access to the EURUSD report, which is a report every single weekend that I work on. It takes me the whole weekend, most of Friday, most of Saturday, and a little bit of Sunday to put together. It's very time consuming, but I do it every weekend, and it basically breaks down the positions by the banks. It breaks down what their thinking is, what they're planning, why they're planning it, what the logic is behind it, what is the expected next move, and if there's trading opportunities based on what we are expecting. Okay? All laid out. And the logic behind it. The most important thing, the logic behind it is explained. Because this is how your awareness of how the markets work gets built, is building the logic, the logical understanding of how the market works and why it works the way it does. So this is the power of the report. Is if you read it every weekend religiously, then it'll start to absorb. You'll start to absorb the understanding, the logic, the wisdom behind the market and why it's doing what it's doing. Thanks, Matthew. COT report is freely available. Yeah, the data is freely available for sure. Yeah, the CFTC has a website and they release the data. Okay, every Friday they release the data, and in its raw form, it's going to look ugly. All right, it's going to look ugly in its raw form, but I go and I extract that information every single weekend on Fridays. I extract it and put it into my spreadsheets. So this is what it looks like when I get it. This is what the data looks like. Let's just let it load here. So it's pretty much like this, okay? That's the data. And you scroll down, you'll see right here, Canadian dollar. Now remember, this is futures contracts. So a lot of people ask me, why do you switch long and short? Well, because the Canadian dollar, if you want it to be strong, you buy it. But on the US CAD, if you think the Canadian dollar is going to get strong, you don't buy it, you sell the US CAD, right? Because US dollar comes before the Canadian dollar, US CAD. So that's why I switched the data, because I trade currencies. I don't trade the futures. So I want the data to represent what I would do, what I see on the charts, strength or weakness. So non-commercials, there's your non-commercial longs, there's your non-commercial shorts. And I plug that data into my spreadsheet, and then I have it coded in such a way that it'll provide me information regarding how aggressive the institutions are being with their positions, how cooled off they are, what's the sentiment, all that sort of stuff. It's extremely powerful. It's only powerful if you understand how to read it. Okay, it holds great power if you understand how to use it. If you don't understand how to use it, then it could actually trick you into doing the wrong thing. Alright, let's see. Is it possible that the price will reach the 4-hour supply that lies inside the daily supply before dropping? Yeah, it's possible. For sure. Yeah. It's possible. Because there is a 4-hour supply here located inside. Right here. So it's possible that price goes like this and then drops. Yeah, that's possible. Once it contacts the supply, the next sequence of events is not highly predictable. Okay? It's not highly predictable. The move up is predictable. Why? Because of what the banks have already shown us they are doing. That's why it's predictable. But once it contacts supply and they start taking profits, then, you know, things are going to be a little bit different. We need to wait and see what they do. We take profits on our positions, just like they do. And then we wait for them to establish some kind of a structure again. And then once they show us what they're doing, then we do what they do. Check everything when you join the school. You will know if knowledge is true. Yeah, exactly, Jason. Can we examine the gold chart after this, please? Shorting of the distal line, my US CAD just closed for a winner. Thanks, White Oak. Shorting off the distal line, my US CAD just closed for a winner. Nice, Nazar. Good. Hello, sir. Do you have any specific pattern before placing a trade after confirming your COT report? No. Well, it's not really about patterns that we're looking for. We're looking at how the institutions create trends, or how they break a trend, right? If it's trending downwards, they'll break that trend, and that will signal price to reverse. So it depends on the context of price. There's different ways that we enter in trades. Okay, there's different ways. It's not based on a specific pattern of candles and how they look. It's based on what the banks are doing with those candles, or what they're doing with price. That's what we base our trading decisions off of. Let's see. If I had the distal line wrong, it's me, not the teaching. Hey, I would like to join the school. I have a phone. Just I only have a phone to trade on at the moment. Is that okay? You only have a phone to trade on at the moment. Is that okay? No, it's not okay. That's the bottom line. Okay? If you want to be a good trader, you gotta sit your butt in front of a computer, get some nice screens, and you gotta put in work charting. Alright? That's what a professional trader does. A speculator likes to walk around with their phones and put on trades, but that's not going to end well for you. Okay? So just my piece of advice. If you only got a phone right now, use that phone to call somewhere up and get yourself a nice, job making some decent coin. Get yourself a nice desktop, buy a couple screens, work towards, getting that done, and then start learning to chart properly and do it the right way. If you want to make money in this business, you got to do it the right way. You can listen to 1,000 people telling you that you can shortcut it and trade off your phone like a champ. It's not going to end well for you. You could learn that for yourself if you'd like to, or you probably have already learned that, but it's not going to end well. It's just like yesterday I received an email from a student that used to be a student of mine. And he was a student of mine for a few months, but he was also a member of some other places where they had chat rooms, and they were making like 1% a month, 1% a day. And so he was very into all that action, right? Oh, this guy's making 1% a day. This is great. Yeah, but the reason why they were making 1% a day is because they had 100 trades open or whatever. And the ones that weren't winners, they just held them. Okay? And the ones that they fluked and got right, they closed them for 1%. You know how horrible that strategy is? It will definitely 100% lead to the destruction of your account. Without a doubt. Well, because what they're doing is they're taking 10 trades, and if one of them is right, then they close them. But then they keep the 9 that are losing, and they pray that it's going to go, in their favor, so they can eventually close them for a winner. But because most of the decisions that they're making are wrong, eventually it's going to wipe out your account. So I ended up coming back, and he's like, now I think I made a mistake because, instead of going for 1% a day and then having drawdowns that will eventually empty my account, why not trade properly and build up my account slowly? Like, don't get so suckered into, I want to make 1% a day, because that type of thinking is going to end up blowing your account. All right? And at the end of the year, you're going to say, I started with 10 G's. At the end of the year, I have 0. Or you can say, I started with 10 G's, and at the end of the year, I have 14 G's. Okay? Or 12 G's. Or 13 G's. If that's not enough for you, then, find something else to do. Because to be consistently making 10% a month, it's not highly probable that you're going to do it, especially if you're making trading decisions off of support and resistance and all that stuff and listening to the news. It's not going to happen, okay? It just simply is not going to happen. You do remember seeing what most traders are doing with the euro, right? You do remember this, right? Okay? Don't you think all these people want to get 10 to 15% a month? Don't you think that's what they're aiming for when they're reading the news and they're like, the U.S. economy is gonna skyrocket and the euro is gonna collapse? Don't you think they're getting in with one lots with $2,000 accounts? Yeah. How is that working out for them right now? Not too good, right? But if you want to day trade and you know what you're doing, then yes, there's opportunity, right? I just showed you opportunity. Yesterday I showed you opportunity. The day before that I showed you opportunity. So there are multiple opportunities to get into trades. And if you're very patient, you know what you're doing, there's the possibility you could make between 5 and 10% a month. But I wouldn't say it's a possibility every single month because I don't think those opportunities are so obvious and right in your face every single month. You know, if I spent the time looking for them and that's all I did was looked for those trades, I'm sure I could find them. But that's not what I do for a living, is look for those type of trades. I like to look for more swing type trades and focus my attention on other things at the same time. So that's just me, and I'm happy with that. I do very well like that. Okay, so I'm going to start wrapping up soon. If you guys can hit the like button if you like today's session, if you like how we focused our attention on the euro today, leave some comments in the comments section. Or even any future sessions, if there's anything that you would like to have us focus our attention on, that would be good too. Let me see the rest of the questions that you got. I have done that in the beginning when I joined White Oak, and it's okay when you're learning, but when you start trading, you really need a bigger screen when doing analysis. Yeah, I would agree. There was 68 smart people in the live Euro US dollar discussion. 20 likes and 2 dislikes. Why? 20 likes and 2 dislikes. Oh, there's always going to be people that are going to dislike. Hey, whatever's going on in their life, who knows? Derek, okay, I love you honestly. Oh, that's nice. Nazar, I don't understand, but I do. It's hard for people to understand and accept truth. Thank God we do. They'll come around and see the value. 25 likes. All right. 25, is that all we got? 28? Sure, that's good. We had I think 70 people at least at one point. We normally get more. We normally get like 40. I've seen 45 likes. Sheesh. We didn't do so well today. Well, anyways, if you guys appreciate it, just give me a like. I'd appreciate it. And we'll do this again tomorrow. Let me see. Tomorrow we got a live session with students. So I'll maybe come in earlier or after the live session. Who knows? Maybe I'll come in before the live session with students, like a half an hour before, and we'll do a quick half an hour session, okay? When I was in a dark place in my trading, Kevin is the only one who helped me. I appreciate that, Jay. Now you're doing really well. Now you close. Hey, what happened with those trades? You closed off a bunch of your trades. Every single one was in profit. How's the rest of those trades doing? Yeah, can we get to 35 likes? That would be nice. Oh, we're at 34. Wow, that's amazing. Thanks, guys. How's the rest of those trades, Jay? You closed off a bunch, made some profits on that, which was nice. Look at Bitcoin, eh? Let's just take a quick look. Look at Bitcoin. Are we like, wow, surprised that it's rallying right now? Where's it rallying from? 55 or 50 EMA, 200-day moving average, 50% retracement, 38.8% retracement. Like, where is it rallying from? Institutional demand, period. You understand? Okay. I was saying that when price was up here, that it's likely going to drop to institutional demand at 35. Okay. So is this like a miracle that it's doing this? No, it's not. It's just based on what was taking place in the chart. It's pretty much that simple. Yes, sir. We will continue. The trades are doing well. Good. Nice.